Yeah, what's up again, YouTube? It's Cody here, just with another recap segment of the trades that we've talked about in previous videos. And this year so far, it's only been a few days, a few trading days, but it's been a really good year so far with nice profits and everything. Today was another big day. The markets. Well, the last time we spoke was Thursday. Like today is Monday, January 6th. So we talked last Thursday. I think that was January 3rd or January 2nd. And so that was the last time that we talked. And so we'll kind of get into it. We talked about the entire market potentially resisting 325. There's been a lot of news with Iran and things like that. But we talked about it pushing up towards 325, potentially resisting there. We had two gap downs, and each time we had these big, huge reversals in the whole market. Um, as I said in the last video, I closed out a lot of names like Baba, closed out PayPal, and Adobe and things like that. We closed gold, a few days early and stuff, and we went over all that stuff and made real nice profits with those. I talked about Facebook being my heaviest long, and that did really well today. It actually had a huge reversal. We opened down towards 206 and we reversed all the way to 212, so there was a huge reversal out of it. I talked about on this day, on this spike, that I sold about 30% of my position, and I sold another 20% at about 211, and then as we're pushing up towards 213, I sold out of another 20%. So I only have 30% left of this position in Facebook. I might look to re-add the dips. Like I was talking about, maybe a potential dip buy opportunity in Microsoft. That will be kind of like my next focus, even more so than Facebook. I still bias long on. I still like it, but you always have to take your profits. And as I was saying before in the other videos, I was talking about it like somewhere in here, and I was saying if you were like if you only had one contract because you're a smaller player, look for a higher push, but don't get too greedy. Don't look for the entire gap fill. There was a gap fill a while back. I don't know if actually I can. This we talked about filling this gap objective, and pretty much we made it there. I mean, it's a little higher to fill, but you never want to be too greedy. You always want to continuously take profits on rips. I talked about 211 and 213 being significant levels, and or not significant really resistance levels, but levels to definitely take some of your profits. Um, so yeah, we did really good with Facebook. I'll go back into Qualcomm. This is one in here. I talked about buying call spreads, and I talked about taking the short-legged spreads off. Even in the dips, I mentioned that, but also on a push towards 85. So with the spreads, I'm all out of all my short spreads. I have longer. Now I just have the long calls, but I have a feeling this trade's really not going to work out. I talked about being light in here though in this area and getting more aggressive towards 85. We're pushing down towards 85. I'm not sure yet if I'm gonna add any more there or not. We'll just kind of have to, like I've been talking about having a moment to reassess some things, like I was talking about, like on the index, how now that it's at that 325 level, I want time to reassess on things like Baba and PayPal and all these various names. Kind of get through the beginning of the month, beginning of the new year, where funds are, you know, getting in new money, getting out, pushing out new money, changing a lot of the things on their books and so forth. A lot of mechanical things I talked about. I kind of want that to sort out. I talked about making a video over the weekend. That never happened. Like today's Monday. I really didn't do any much work over the weekend. I was kind of busy doing some stuff, but And another thing, like a little tip that I've learned, I do think when you're just beginning trading, it's probably good to put a lot of time into it. Like, I mean, I used to be that guy that would spend, you know, 10, 12 hours a day, just researching different patterns and different things like that. But and which is probably actually a good thing in the beginning, but over time, like I've been doing this for 4 years, I've probably at least 10,000 hours under my belt, and it's one of those things you start to realize that sometimes too much analysis is actually a bad thing. You always want to give your mind a chance to refresh. That's kind of how I've been feeling over the weekend. I just kind of felt like, not to force things. Like I don't like to force things upon myself anymore. I just noticed, like, a lot of the big guys, they'll call it paralysis via analysis. It's like where too much analysis will actually paralyze you in a way. And sometimes you just kind of want to get out, hang out with your friends, and soak up some sun and stuff like that. And I just feel like that could be a helpful tip, over time, like to not like try to cram too much information and too much analysis in your head. And so I'll just throw that out there. But we'll go over the rest of them. We talked about Peloton. Talked about this being a relatively high position. I mean, definitely not nearly as big as Facebook, but I mean, this is also a riskier stock as well. We talked about Peloton on this day during this close, right around this area. I actually bought it on this day, and we talked about that on this day. They were $1.03 here, where I got them. They were probably about $1.20 here, so not like we had to pay that much more. I still talked about it being a really good risk reward. I talked about if you can get a dip buy opportunity in this range, which you actually kind of got. I mean, that dip was a total gift, and that you could have got in around the price I got in, and I talked about selling a third of it on this day. We rallied even harder, and then we rallied even more. And on this day, I talked about 31 and a half. We were in this range when I talked about. I said I'd be selling some at 31 and a half. You check my previous videos and stuff. And so we hit 31 and a half, and I sold a lot of it. I sold. I'm about out of 75% of the position. By the point I hit 35 and a half, and I also talked about 33 and a half being another decent level. As we dip back into this range, I might look to re-add a lot of the stuff we just sold. And I always love. I'm not really the momentum type of guy. I always like, if I want to go long something, I want to rally. I mean, I want to dip to buy on, and if I'm shorting something, I want to rally to sell into. Like, I'm more of a contrarian style player. Like, I don't really like to just trade the trend all the time. I mean, there's times that even when we have in these segments, like when I bought Adobe, I bought that in purely into the momentum, and it was a really good trade. I'm not saying all trades are bad when they're not momentum, but sometimes the momentum can work, and so I'm not like knocking that too much or anything. I'm just saying I'm more of a dip type buy. We've been talking about trying to get Microsoft on, try to get Microsoft on a dip towards 156. We actually hit 156 and a half this morning. Had a huge reversal. I didn't catch that. Most people probably didn't. And I'm not one of those guys either. I'm not the type of guy that well, in my time, I'm in Pacific Standard Time, so the market over here opens at 6:30 in the morning. And I'm not that guy that's sitting there at 6:29, fucking, hanging out at the fences, trying to get in like a wild horse almost. It's almost insane to me when I see that. I mean, some people are really good at trading the morning volatility, but I actually like to wait about 15 to 30 minutes, unless if I'm, completely sure that's the level that I want to buy. And like for Microsoft, because I'm doing options, so I can't always just have an order exactly in ready to go. I have price alerts and stuff like that. And but if we get a push towards 165, we kind of break this low a little bit, I would look at that as an opportunity to get long Microsoft. It's actually one I'm pretty excited about adding. So definitely look at that for the dip. Like I said, I have to reassess what the whole market's going to do. The whole market, Oh, you know what? We'll talk about AbbVie also. AbbVie, you know, had a uh, oh, I actually thought it was up today. I mean, it closed down 5 cents, so I mean, I only thought it was up a little. And you know, like I said, I'm not one of those guys that, you know, even when I'm going during the day, like I'm not watching this thing for the entire 6.5 hours. Like I have enough confidence in my levels and my, you know, where I'm gonna risk out. You know, I do it all through options, so you know I don't need to watch everything, and I don't have, you know, multiple monitors or nothing like that. I trade on my laptop and that's it. Like, I mean, yeah, I do run analysis on another computer. You know, I designed a lot of algorithms and stuff like that, and that's kind of how I do a lot of my analysis. I mean, I still have to pick my spots and things like that, but my trend bias is based on my algorithms. And so I do use another computer, I guess, for that. But I mean, for the trading, for most part, you know, the day is just for executing. If I already know the levels I want to transact, like, what do I need to watch? You know, if I know I want to get Microsoft to 156, and if it doesn't alert me, you know, then I don't need to get it. I don't need to rush into it at 156 and a half because, you know, it's open. You know, I'm not going to change my bias just based on a 1 minute candle, you know. And I just kind of see that stuff a lot. I mean, there's nothing wrong with them. I mean, there's a lot of guys that are extremely good at trading, and you know, most of the money is made and lost, you know, in the first 30 minutes. But that's because a lot of funds opening and closing, you know, more longer term transactions. They're not always, you know, jumping in the gates just to, you know, flip it real quick. And sorry, I'm kind of rambling a little bit. But AbbVie, I still have a pretty good size. We talked about AbbVie somewhere in here, and you know, as we pushed higher, and or shoot, well, we're on the 5 minute. That's why that kind of looked weird. Okay, on the daily chart, I still don't really know how to use this trading view. I just use the trading view, just, you know, because I don't like put all my chart stuff on here, but on AbbVie we talked about it in here, and we had our spike up and everything. We sold a lot. We've been simultaneously, if you go through the previous videos, you know that we've been simultaneously buying and selling. I added some, sold a little bit. I still have a pretty good size position on here. I still like it for a push higher. We're still kind of flagging. You know, same with anything. You know, if you bought on a dip, I'd sell some on a pop. You know, and kind of keep trying to recatch it, you know, on those dips. You know, it's like a really reliable way of trading, in my opinion. Like, it just psychologically and in just so many other ways. But yeah, so basically those were the only positions I had left. You know, I had a little bit of Qualcomm spread. I had big position in Facebook, paid out really nice. So I only hold about 30% left of that. I only hold about 25% of Peloton, which also paid very nicely. And you know, AbbVie was still kind of waiting for that push, but this isn't a huge position either. You know, we talked about even here when I was super right on the trade. I didn't even have like the biggest position in it, but still paid out really nicely, and I still like this one continuously on the dips. Talked about McDonald's, possibly buying McDonald's on a dip. We got a little bit of a dip towards 199. I was kind of looking towards 198 to 197. Just didn't quite get that, and then McDonald's actually had a big push higher to 202. And so yeah, that was that. Oh, by the way, the Pelotons, the trade we talked about was the 28-32 call spread, paying $1.03. And when I recommended it in the video, was they were $1.20, and then I sold out of a third of it at like about $1.60. So I took in, you know, 60% return on that, and then I sold out another chunk of about 35%, you know, leave over 25 left, and sold that for $2.43, so about 140% profit there. And you know, if we push towards that 33.5 level, I'll definitely be out of the rest. And by then, you know, those will be paying out really nicely, probably over a triple at that point. So really like that, really nice trade there. And yeah, So, yeah, we went over those four things. Like I said, I'll be looking for some opportunities. I want a little time to reassess and to look for new potential dip buys. We might be getting back into things like Adobe and PayPal and Baba and names like that. Definitely looking at Microsoft. Maybe even get back into some of the Facebook sold. Um, like I said, if you had one contract and you've been following along, you definitely should have sold it today. And if you get another pop tomorrow, definitely sell it. You don't want to be too greedy when you can't scale in size. And, we've all been there. It takes a long time to get even the confidence level to buy multiple contracts and multiple positions and be able to scale in and out and to be able to cut your losses when when you just come to the conclusion that you're wrong, and so for so many things like that it takes you a while to move up to it. So I know a lot of people watching probably only do play with small size, so I'll try to throw that in there, not just the scaling things. Like if I were to buy one contract, what's the level I would get out at, and things like that. And like I said, I've talked about it a few times in Facebook, about if you had one, maybe towards that 211 range, I'd sell it, but we hit a high as 213. So, you should have definitely been out today. You never want to get too greedy. You definitely well than doubled your money on that. You don't want to move like that, especially if you played, simultaneously into, kind of into the dip ranges. I recommended Facebook on this day, and we spiked higher, spiked down, and now we've made that big push. Talked about filling this gap objective, for a short-term basis, and I'm still biased long, and so forth. So. Oh, and we'll talk about the hedge. That was the other thing that we had on. But like we always say, hedges, you should actually want them to lose your money because they're to hedge you out. We did make another push towards 320. We initially got in these at 90 cents. They had a high of $1.20. They dropped down to like 30 cents, and then from that 30 cents range, they actually spiked back up to probably $1 or something like that. And then even same today, when we were here, they probably spiked up the 90 cents range again, and here we are again. They're only worth about 30 cents again. And like I said, these are pretty much like a hero or zero. And if we now that we've closed some Facebook and things like that, then I would definitely look to, if I could get 90 cents out of it, or maybe even 60 cents, to start cutting some of those for a small loss and things like that. But like we always say, hedges are good to lose money, and because I'm still trying to decide, what's going to happen, because it's been very strong how the market reverses so sharply. Like I did expect some resistance towards 325 if you watch my previous videos, but and we spiked lower, but we just reversed so fast. It's pretty impressive the strength that you see, and so maybe we'll kind of consolidate here or something like that. But like I said, I need a little more time to recap, and then I'll have some new dip buy opportunities, or new, or even short, opportunities and things like that. I'll figure out some things based on when I start seeing the trends more. It takes some time and research even to run it through an algorithm. It's still plugging things in and trying to figure out the tape, because it's basically just a giant puzzle, and you got to figure out how everything correlates together and stuff to really kind of figure out what's maybe coming next. And but like I said, we started this off really well. Throughout all these trades, throughout the videos, you would have made some really nice profits. Not trying to brag or nothing. I mean, it doesn't always work that way, but it's been a really solid beginning of the year, solid December, had a very solid November, and things like that. You even start to see it as the options volume, average has been picking up pretty dramatically. So a lot of option guys are feeling more comfortable, taking more risk in this market. One thing I will note is no, or one last thing. I'm sorry. Hopefully, I'm not going in this too long. I don't have like a timer that tells me otherwise. And let me know if you guys think these are too long, and I'll try to kind of cut them down if I should leave out some things. I kind of like throwing in little tips and all that. And like I said, I wing these, so you know, I'm just kind of freelancing this whole thing. But what we have though is the last time we were down in this range. This is the VIX, which is the volatility index, and basically the higher this chart is, the more volatile the market's prone to be. And these are based on the basically a month out option expiring on the S&P 500. So it's just measuring, how much the options market is pricing in into these moves, and it's always very, not very accurate, but I mean pretty darn accurate, for it always implies a lot. A lot of hedge funds have to remove risk and do different mechanical things as it spikes, so it obviously makes sense. But we were down in this range when we were at the all-time high before, and now we're kind of higher in that 14 range. We were in that 12 range, so that's something to take note of. That divergence in the VIX compared to the market, and so we're seeing these bigger spikes in volatility. I'm definitely thinking volatility is about to pick up some, but it's a question of whether we trade sideways, trade lower, or trade higher. It's impressive how it hits these resistance levels and it might fade out, but it comes strongly back. But it also resisted there, so we're kind of in this, I don't know, neutral bias type form, and I mainly want to be in cash mostly for now, and as things set up, we'll talk about all that. So definitely look out for my next videos, and I'll have some new trade setups and things like that, and I'll talk about what I did with the remainder of the Facebook and the Peloton and and the AbbVie and stuff like that. And so yeah, sorry for going in this so long. If you have any questions or anything, or want me to talk about something, feel free to leave a comment. I'm not going to go through what I use and algorithms and and strategy and all that type of stuff. I'm not going to, I'm doing this as a thing for somebody to follow along, to know where to transact and to buy, and this will actually help you guys a lot if you really do follow along. I'm not going to go into what strategies I use and things like, I mean, yeah, I could talk about certain technical indicators and make videos on that if you don't know, the basic, price type oscillators and stuff like that. But yeah, so I mean, maybe we can do something like that. But yeah, appreciate you guys watching, and peace out, guys.